Warning, this video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Alright, hello and welcome to Camel Finance. I'm your boy Camel, and what a week it's been, eh? What a week. So, I'm going to show you a few things to do with Bitcoin today that are kind of interesting, okay? Is momentum returning? I see a lot of people, excuse my trigger finger, I see a lot of people out here gloating that people that panic sold or whatever are making the wrong decisions, but as far as I can tell, okay, we're a long way from repairing the charts, so there's some encouraging signs under the hood, but when we get to the charts, you'll see, I think there's still quite a lot of work to do, and then I've got some stock market stuff to show you, which is very, very interesting. Okay, very, very, very interesting to me. And again, I'm seeing, as you're going to see in a minute, a lot of people kind of gloating about the bottom being in, and that was just a shakeout and whatever else. But the charts don't really support this. And again, I am here to suggest to you that you keep an eye on who the real traders are, okay? Because you can really tell the people that are actually out here managing risk and admitting and acknowledging that there's uncertainty right now, they're likely going to be here in a few years' time. But all these people that are out here mocking and jeering people that took profit or pretending like you just buy every single dip blindly and nothing could possibly go wrong, especially late into the weekly cycles, which again, I'm going to show you in a minute. Even if they get away with it this time, you know, eventually when the top comes in, whenever that top is, whether it's soon or whether it's much later in life, they're going to have this exact same attitude of just blindly buy the dip. And this is how those people end up ending their careers as traders. So make no mistake about it. I've been one of the biggest bulls and I am ready to be one of the biggest bulls again if I see true repairs on the charts, if I see true technical reason to start to be bullish again. But as it stands right now, and as I'm about to show you in today's episode, I think there's still a lot of risk and uncertainty out there. And I think the more that people start to get very, very confident in their assessment and in their posturing to the bullish side, the more and more likely it seems that there is probably a leg lower to really upset and wipe those people out. And then out of those weekly cycles, I think we've got a chance of perhaps seeing some short-term relief, if nothing else. So kicking off with Bitcoin as always, okay, Russia just legalized Bitcoin mining. So underlying bullish, I would think so. And speaking of underlying bullishness, okay, we've also got the ETF inflows just starting to flip the other way again, okay? We just saw the highest inflows over the last 2 weeks. So perhaps the ETF guys are out here buying the dip at least. That's what this would suggest for now at least. And we've also seen a lot of the shorts be unwound, okay? If we look at the black is the Bitcoin price, okay? And this bluey purple line is the Bitcoin open interest. And you can see a lot of this open interest is gone now. So a lot of those shorts have been unwinding, covering, taking profit. And of course, when you undo a short, when you close a short, when you cover a short, you have to buy, and that is put a bid under the price of Bitcoin. So for now, at least, we're getting some relief, okay? And we're seeing people stopping shorting. But that does not mean, of course, we couldn't see this ramp back up as they start to short resistance again overhead. And again, when I show you the cycles, there's still a lot of uncertainty. And you're always going to have your people that are maximum bullish, okay? But again, those people don't really make it over the long term. We've also got the percent of Bitcoin sitting in profit just being reset to the lowest level since October 2023. So 71% of the supply was in profit when we hit 54K. And the last time we were at 71% of the supply sitting in profit, we were at 28K. And of course, very good things happened to the price of Bitcoin thereafter, okay? Bitcoin practically doubled in a very short period of time. This is underlying bullish as well. It hints at bullishness, but again, as you're going to see, the charts don't really support it as far as I can tell at this current moment in time. Over in traditional finance, again, this speaks to a lot of the craziness that I think I'm seeing at the moment. We're seeing headlines like this, okay? The S&P just posted its best day, its best one-day gain since November of 2022. But when we pull up a chart, is this something to be excited about? Personally, I don't think so, okay? And again, I've got a very good track record of catching momentum if it shifts, and if it does shift, I am ready to look for third and final blow-off top angles to come in. But as it stands right now, okay, we are contained under resistance, we possibly have a failed daily cycle, and we are late in a weekly cycle. This says even if we do break out from here, even if we just go straight up like this, okay, it likely doesn't last long, this rally, because we are late in the weekly cycle. So again, I'm seeing an awful lot of these kind of headlines, an awful lot of people saying that was the bottom, people got shaken out, but the charts are damaged, and damaged charts take a little while to repair. And there's still a great deal of uncertainty for this yen carry trade. For anyone that's unsure, okay, this whole thing essentially works by people borrow money from Japan and then invest it in the US stock market, and that trade is currently being unwound, meaning that they are selling US equities to pay back the money they borrowed from Japan. That's an incredibly oversimplified way of putting it, but it it will do for this episode today. Now, how big is this yen carry trade? Well, it might be about 20 trillion, okay, which is 505% of Japanese GDP when we use the government balance sheet. So you can see that here, okay? 505%, around $20 trillion. So that's not nothing, okay? That's very, very significant. JP Morgan appears to be out here doing damage control and saying that about 75% of these global carry trades have been unwound already. But not only do I not believe this, okay, there's no way if this number is accurate, right? If this number is accurate, there's no way that 75% has already been unwound. And you can see I'm not alone in this assessment, okay? All the way through these comments, people are spotting that this is just damage control. Yeah, I'm going to call BS on this one, okay? Like, they're not fooling anyone here. Okay, risk is still very present, uncertainty is still very present, and these weekly cycles rarely don't present, okay? They rarely kind of completely break. They can show up slightly early, they can show up slightly late, but given where we are, okay, even where this blue arrow is here would be kind of on the early side. It would be closer to being early than being late, and we could probably go a whole daily cycle of around 40 trading days. Beyond that, it would be somewhere in this neighborhood, okay, and that would still be inside the timing window to see a weekly cycle low. So the fact that we've got second angle violations, failed daily cycles potentially, and a whole heap of risk out there against a backdrop of people that are accusing everyone around them of panic selling or, oh, you should have just blindly bought the dip, bro. You know, we've already done this to death. And again, there's still no sign of repair here, okay? It actually makes a lot more sense to me to bounce off resistance here and then have another leg down. And if we do, okay, then we can talk about being bullish. But as it stands right now, again, there's still a lot of risk, there's still a lot of uncertainty, and JP Morgan out here trying to perform damage control is not something that makes me overly confident we're about to rip higher either. And remember, all of this occurring against a backdrop of the US credit card debt just hitting another all-time high. Okay, the consumer is really hurt. The consumer is what drives the business cycle. The consumer is what is responsible for recessions. If people don't have any money and they've got loads of credit card debt, then are they going to go and support the economy? Are they going to go and spend and keep the economy turning over? No, they're probably not. Okay, this is the reality. We are getting closer and closer to a recession with every video that I make. Do you remember El Clasico from Camel here? This is the 2-year yield in green. And I've been saying for a long time that this is the signal for when the Fed is going to start to cut rates. Okay, whenever we see the 2-year yield move lower, we see the onset of a Fed cutting cycle shortly thereafter. As you can see, every single time the green one moves down, okay, the Fed starts cutting rates shortly thereafter. But I've never actually quantified how low down we needed to go. I've always just kind of said, once we get below this low right here, okay, then any kind of move below that is the bond market telling the Fed you will be cutting immediately. But to actually quantify this, okay, as it stands today, the 2-year yield is 1.56% below the Fed funds rate. Okay, now historically, that supports the beginning of a Fed cutting cycle. We have actually reached that level now. Okay, we've actually reached that level where quantifiably we can say the bond market is doing everything in its power to force the Fed to cut rates. Remember, it's the bond market that controls the Fed funds rate, not the Fed. Okay, a lot of people get that wrong. A lot of people sit here and say, well, the Fed can do what it wants. It cannot, okay? The bond market in aggregate is in control of forcing when the Fed is going to cut. And right now it is saying, we want you to cut immediately. So does this put on the table an emergency rate cut for August? I don't know. Or does it mean that we're going to go straight to slashing rates in September's meeting, straight to 0.5 percentage point cut, and then probably it's going to accelerate to the downside very quickly thereafter? All of this, again, speaks to uncertainty right now. And we've got a backdrop of everyone having been trained to just blindly buy the dip. I'm not convinced this is going to be the best strategy going forward. On the flip side of that, if we're going to try to be as bullish as possible, this is historically very, very bullish. Okay, we've got the put-call ratio for equities down the bottom, and of course the S&P 500 on top with the candlesticks. Now, notice every time we get the put-call spike, this speaks to everyone short in the market. Okay, and it usually resolves in major bottoms before rallies. Same here, big spike, everyone's short via the puts, okay, everyone's buying options to hedge downside or to try to capture a short move, and again, put to call ratio rolls over and we see a bottom come in and a big rally for the stock market. So that's the exact setup we got at the hard right edge. Everyone was hedging, okay, everyone was trying to short the bottom, and now this is rolling over. So it speaks to, again, potentially seeing a move higher. But once again, okay, very, very simple techniques work. We draw a trend line across the top, okay, until we break out, then we are contained below resistance with no sign of technical repair. It's just something to keep in the back of your mind. We've got more evidence here because the market actually remains seasonally weak, okay? Seasonally weak into about the middle to the late of September, okay, down the bottom here, telling us to keep an open mind about a little bit more downside for a few more weeks. And what does that line up perfectly with? The weekly cycle low, of course. Is it entirely possible as well, okay, that we have only just done the third wave, we are working on the 4 before one final leg down? What else does that line up nicely with? The weekly cycle low, and of course, we would get to take everyone's stop from back here. Again, a simple trend line will tell us when this has come to an end and when we are starting to repair the structure. So the basic stuff works, okay, and I keep coming on here and saying the same thing, but it is risky to be long based on the cycles. And this is why I use cycles. Cycles tell us that any breakout here is late in the weekly cycle, and thus risk remains elevated until we have elapsed enough time to find a weekly cycle low. Something like this would actually be a very, very nice entry, okay, in here. As you can see, the long is lined up. Let's see if we get it. Of course, there's an outside chance that this is a day 44 cycle low, and if that's the case, then we will see a breakout. So I'm ready either way, but for now, nothing for me to get excited about personally. The NASDAQ is exactly the same, okay? Second angle violation, okay, we could easily be working on, if we draw our eyes to this here, okay, breakdown, retest, possible resumption. That's certainly on the table, and again, we are still contained below resistance. The long is here waiting, okay, but what is to say that we don't do this and then lose the first angle, okay? What's to say that? There's no saying that that is not in play, and again, I suggest to you, it's still quite risky to be long here. Now, if the thing's going to break out, don't make the mistake of thinking I'm super bearish here. I'm not, okay? I'm completely open to anything and everything. And if we're going to get a breakout, again, I've got a very good track record of catching that. But as it stands, it is objectively risky to be long. Let's take a look at the Dow, okay? Does that look like something to be excited about to you? Even if we encompass these bottom wicks, okay? That is possibly breakdown, retest, resumption. Okay, so if a third angle's coming in, I don't see any sign of it for now at least. For now, I see no sign whatsoever. I see, even when we adjust the trend line, a significant breakdown, retest, resumption. If we had it where I had it initially, okay, breakdown, hard retest, resumption. So there's a lot of work to do here. This is just the objective truth. Is a lot of work that needs to be done before these charts can actually repair. Repairs, typically speaking, don't happen in a week or overnight. Typically, they take a few weeks to work themselves out. They take a few weeks to paint some structure on the chart. Before then, we can start to resume a primary trend. The VIX is subtly getting better, isn't it? But is that or is that not still breakout, retest before possible resumption to the upside? Okay, now, even if we get a bounce here, something like this, if it forms a lower high, below the close and specifically below the wick, okay, then again, we can entertain finding a weekly cycle low for the stock market and looking for resumption of the uptrend. But for now, at least, okay, it's trying to get back below the blue, which again is bullish. If it can get back below the blue line, which goes all the way back here, again, that speaks to being bullish. But for now, okay, objectively speaking, it's a breakout, retest, possible resumption. Again, still speaks to there being uncertainty in the markets. And if we draw our eyes to Bitcoin, I appreciate it's a bit of a messy chart, okay? But here's the reality. Everywhere I look, I see technical damage. If I scroll out and start with this green line from back here, okay, this is the prior all-time high from the 2021 bull run. We came up, we chopped this line. As it stands right now, we are significantly below the green line, okay? So it's one thing to chop around that line. It's another thing to move down from it, okay? So that, for me, is not a good look. What else have we got? Daily and weekly cycle low in here. Possible cycle inversion, okay? Possibly we just forced a half cycle low, but we won't know until we break out above the downward slope in red at the top. So if that's a cycle inversion, that is bullish. But for now, it could just as easily be a failed daily cycle, which of course tells us the next cycle low should form below both this cycle low and the half cycle low. Okay, that's what the cycle theory says. If that really is a failed cycle, not an inversion, then we are looking for something like this to occur, at least. In the best case scenario, if not, more downside thereafter. So again, more technical damage. And if I draw your eyes to this second angle in red right here, okay, if I draw our eyes to that, what do you see? We chopped it, we recovered, and now we've got breakdown, retest, possible resumption into a daily cycle low. Okay, so it's one thing, like I said, being super bullish all the time, and I've been incredibly bullish. But as I often say, particularly in the level 3 members section, I say this pretty much every video, probably multiple times. I say our job is to stay on the trend and push the trade until it becomes unreasonable to do so. And where we are right now, if you are max long, okay, if you are adding leverage, if you never sold anything, right, it is, in my humble opinion, unreasonable to keep pushing these trades. Okay, that's why I don't have any trading positions. I've still got my core allocation, like I've said before, that is a different strategy. But from a trading perspective, okay, where's the bullishness here? The only way you can actually make a bullish argument, in my humble opinion, is if you zoom all the way in, like this, and say, well, that's a big green candle, okay? But it is still, objectively speaking, lower, let me get my pen. Look, lower highs, lower highs, lower highs, lower low, even lower low. Okay, now is it compressing before a breakout? Possibly. But is it reasonable to keep pushing longs here just because I'm never selling, or diamond hands, bro, or whatever? I don't think it is, personally. And again, you do you, and I'm going to do me, and that's fine, okay? It doesn't really matter. But for me, we've got a long way to go, okay? And particularly if this is breakdown, retest, resumption into a daily cycle low that forms below this and this low, well, once we get here, what will we be able to say? Well, that was pretty obvious, okay? Why? Because daily and weekly cycle, failed daily and weekly cycle, tells us the next one's coming lower down, okay? That's just how it works. So again, as always, if momentum returns, I got a very good track record of catching it. We see something like this, okay, and then a breakout, then you can guarantee I'll be long here, okay? And if we are going to squeeze higher, then that's what we'll be catching, okay? Another nice trade, no problem. But I hope you can see based on everything I've shown you, okay, and my pretty scuffed TA, admittedly this is a really messy chart, but the weekly cycles are down, okay? We got cycle failure, probably here, daily cycle failure. We got cycle failure in Bitcoin as well. We got seasonally weak data. We've got a yen carry trade that probably isn't finished unwinding yet, all against the backdrop of people getting very, very smug with themselves for actually doing the wrong thing, okay? For not managing risk, for not protecting downside, for not hedging, for just sitting there and panicking, but not actually taking any action. So I do not like this setup, but as always, I am ready to capture it should momentum return. So other than that, I hope you have a fantastic weekend, okay? I hope you'll consider what I said. At the end of the day, you do you, and I'm going to do me. And that is what makes a market. We each get to have our own opinions and decisions, and we each get to have our own trades and our own risk management, and so on and so forth. The weekend deep dive should be kind of interesting, and we've got some inflation data coming out soon. So again, it's going to be a pretty interesting week going forward. Even more volatility into the CPI is likely expected. So if you think this chop's been annoying, well, I hate to tell it to you. But again, we've got even more chop and volatility on our way next week. As ever, we'll keep taking it one day at a time, okay? We'll keep staying unemotional, we'll keep staying unbiased, open to all possible outcomes, and ready to capture the trades if quality setups present. If you're a level 3 member, look out for the members-only video tomorrow as well. Other than that, I hope you'll have a fantastic weekend. I hope you're doing well in life. And until next time, take care from me. All the best. Cheers. Bye.